Hello, everybody. Adam Bergman here, tax attorney and founder of IRA Financial. On today's video, mastering IRS Form 5500 Easy for your solo 401k plan. So this video, I'm going to try to keep it as short as possible because really what I'm doing is explaining a one-page form. And this is actually one form where the IRS got it right. Why? Because it's really easy. It's a one-page form that if you have a solo 401k plan with more than $250,000 of assets as of 12/31, you must file this form. And you can do it paper or electronically. We'll go through all the details, how to complete the form. Now, the good news is this. If you're a client of IRA Financial, we will do it for you, okay? You'll need to go on our app, submit some basic info. We will e-file it for you with the IRS, so we make sure it is correct, because as your third-party administrator on your solo 401k plan, we have the expertise and knowledge to make sure this form is done right. We'll go through the presentation. You'll see there's extensive and significant penalties if it's not filed timely. Okay, so this is a very important video if you have a solo 401k plan. The goal is for everyone to have more than $250,000 of assets at some point, right? That's the idea, is your plan wants to grow and grow in value so you can benefit and have richer retirement. So completing this form is vital. It's important. We do it for you if you're a client of IRA Financial, which is a very, very important feature. Why we're one of the leading providers of self-directed solo 401k plans in the country. I've written 2 books specifically on the solo 401k plan. So you can trust us to make sure this gets done correctly. Okay, so I'm going to go through some basic rules here. Again, if you have less than $250,000 in your plan as of December 31, you do not need to file the 5500 EZ. Now, I just want to make a point clear. I spoke to a colleague of mine earlier today, and she's like, make sure you mention this point, and I will. If you started filing the forms, let's say you had 280, 290 in 2020, 2021, 2022, and suddenly your assets dip below 250, you're right. Technically, you probably don't have to file the form. But here's the thing. If you don't, guess what? The IRS is not going to know what happened. Specifically, if you did not check that this is your last return on the form, which we'll get to in a minute, they're going to wonder, where is your 5500 EZ? So guess what? That's going to cause them to notify you by writing in a letter. And then you're going to have to explain that, no, my plan assets are below 250. That's why I didn't comply. And now the IRS could contest your value or not. And it just becomes an extra letter writing campaign, extra nuisance for no reason. So the bottom line is this. If you start off below 250, you don't need to just file if you have a plan asset of 100 or 220. Okay. If you're in your 230s, 240s, I would file it anyways, assuming it's not just cash or publicly traded securities, where it is very, very demonstrable and precise in terms of valuation. If you're dealing with alternative assets that are more arbitrary, real estate or private notes or private business stock, and you think it's close to 250, just file it, or we'll do it for you if you're a client. No skin off your back. It's easy. Just do it. You'll see at the end of this presentation, the penalties are pretty drastic. Okay, so again, if you just first year you have 200, you're under 250, don't need to file. If you filed in 21, 22, and now it's 23, and you think you're below 250, you're right. The instructions say you technically don't have to file. But I would file anyways, because you just want to make sure the IRS has all that information, because if you don't, you could run into some, not problems, but just headaches dealing with the IRS. Again, who has to file this? A solo 401k. A solo 401k is a 401k that has no full-time employees other than the owners of their spouses. So if you work at Apple or Tesla or IRA Financial, you don't have a solo 401k, and your business will file the 5500. It won't be an EZ. It's going to be a 5500 form, whether it's a short form or just a regular 5500. They will do it for you. You do not have to worry about it as a participant in the plan. But if you have your own solo 401k, you have no employees, okay? The only employees are the owners of their spouses. You are in the solo 401k world. Congratulations. It's a great place to be, but you have to file the 5500 EZ, okay? The whole idea of this form, it's an information form, even though there's steep penalties, is to give the IRS some insight as to the value of your retirement plan. It's the government. They want to keep track. The more data they have, they love, and they like to see trends so they could determine if you are reporting proper value as you get older. Okay, so as I mentioned, here's some filing tips. July 31 is when it's due. You can file an extension under a form, which we will do for you, called a 5558, 5558, where you can get extended up to October 15th. And you would have to obviously do that before July 31. Again, it's July 31. You can extend to October 15th. This is for a solo plan. If you have less than 250 in assets, you can stop watching. But it's probably a good idea to know how this thing works anyways. If you have 20 minutes to kill, you'll have some fun. You'll learn some stuff. If you started filing because you were above 250, now you're below it, my advice is continue filing. Even technically, the instructions say you don't have to, because you're going to hopefully prevent headaches and communication campaigns with the IRS. Now, you can file hard copy, and we'll see in a second. You can file it by e-fast filing. If you file more than 10 returns in a year, so let's say you have an S corp, you have other returns, you file partnership returns, whatever it is, and you're more than 10 returns, you have to e-file it. Okay, so most of you probably don't have 10 returns you file, but if you have like a 1120, 1099, so on and so forth, and you're above 10 returns, including 1099s, then you have to e-file the 5500 EZ, even though you technically have a hard copy option. They want you to e-file if you're, I guess, a more sophisticated taxpayer. Okay, as I mentioned, you can get an extension of 5558. It's super simple. You don't attach it to the form, just file it. And the IRS computer system will link the extension with the 5500 EZ you will file between July 31 and October 15th, which we will happily do for you. Okay. Some tips here. You don't make up your own form. Just Google 2023 IRS Form 5500 EZ. It's out there. Use blue or black ink. Print, sign, and date. If you're doing it by hand, try to write as clean and neat as possible. You can also type it in. That's always easier. Don't use felt pens, or other instruments that could stain or leak. Just keep it simple, easier. Don't put arrows and make notes. They're not going to look at it, or schedules, attachments. Don't do that. If you file hard copy file, I just had an issue with a client a couple of weeks ago. He got a letter from the IRS from saying, "Hey, Joe, where's your," and his name's not Joe, but "Hey, Joe, where's your 5500 EZ from 2021? We saw you have a 19, a 20, 22. We don't see your 21." And this gentleman actually sent it by certified mail. So he actually had a receipt, and he sent it to the IRS, and it went away. But just remember, things get lost in the mail. So if you are worried about that, e-filing could be easier. If you are going to file hard copy, I would certify it or FedEx it, get a receipt. If you just drop it in the mailbox, you're probably okay, but there's still the government that runs our postal service, so no guarantees. But just keep a record. You may want to take a picture of the form, take a picture of the 5500 EZ, take a picture of the envelope, the stamp. I mean, any proof you have, or literally go to the post office and return a receipt, certified mail it, and just get a record, or FedEx or UPS. Just get some record that you put in the mailbox, and it's done, because the penalties are pretty significant. So let's get to the form. Okay, I have copies of the form. I kind of broke it up because just thought it'd be easier that way. So this is the first part of the form. It's literally one page. You can Google it. I'll put in the notes right here, so you can see it for yourself. Okay. It's one page. It's easy. This is the first part of it. So you would just check the box, right? My 13-year-old kid can probably do this, but we're here to help, right? That's our job. So you'll indicate, is it the first year you're doing it? Is it your final year? That's an important thing. Let's say you close your plan, you rolled over everything from your 401k to an IRA. We would do it for you. But if you're doing this yourself, please indicate this is your final return, because if you don't, and you stop filing, the IRS will knock on your door. Well, they will send you a letter. They don't knock on your door. And they're going to say, where is your 5500EZ? And now you're going to have to explain what happened, and you will be able to circumvent the issue, but it's a pain. Anytime you deal with the IRS, it's scary and it's annoying and it's stressful. So stop it from happening. If you're amending the return, right, you screwed up, you made a mistake, calculation was off, you made a typo, whatever, you would indicate it and just file it again. Or if you have a short plan year, which doesn't really occur, but you can indicate that. B, if you filed the extension, check if this is a 5558 5500EZ that relates to an extension. If you do not file an extension, you do not need to check that box. If you got an automatic extension or a special extension, you would indicate it. But generally, most folks will get an extension. That's generally the popular approach. Just gives you more time. Yeah, we like to procrastinate, so most people check the extension box, and that's fine. The Form 5558 is super easy. C, if it's a foreign plan, that doesn't really happen much. You would check the box. If you are part of a late filer penalty relief program, which we've helped clients do, that is if you screwed up and forgot to file this thing for whatever reason, if you submit and basically come to the IRS and plead for forgiveness and admit you screwed up and you get part of this relief program, it's very minor. It's like $600 and you can get around any penalties. But if they get you first, you can't get into this late relief program. Okay, so it's basically like, hey, I screwed up, IRS. I'm sorry. Here's a very small fine. Let me come clean and let's go forward together. But if they catch you without you preemptively joining this late relief penalty program, the penalties could be in the tens of thousands, if not more. It's pretty crazy. And if this is part of a retroactively adopted plan by Secure Act, meaning, which is important, if you've basically set this plan up for a prior year, so the plan was set up in 2023 for the 2022 year, you would check this box. This is a new box that is new to this form. So it's just something to be aware of. If you set up the plan in March and it's for a prior year, you would indicate that to the IRS. Okay, let's get to here. Hold on. Okay, so this is part 2. We did part 1. Name a plan. That will be on your adoption agreement, right? Not too difficult. And this presentation is available on our website. So if you want to go through it, you can do that at your leisure. You can also, if you're our client, just reach out to us and we'll happily go through any question. Or we do this for you. I mean, that's why we're the best in the country at self-directed solo plans. We don't just give you the plan docs, the IRS opinion letter. We give you the advisory services, the consulting, and the tax filing and reporting, which really sets us apart. So the name of the plan, it's on the adoption agreement. You'll know that. The 3-digit plan number is generally always 001. When would it be 002? If you have multiple plans, it doesn't happen. Multiple plans for a business doesn't really happen. If you amend the plan, you're still going to generally go 001. Employer's name, you guys know that. It's the business name, Tesla, IRA Financial, ABC. Your EIN, this is the EIN for the business. If you're a sole proprietor and you don't have an EIN, you're going to need to get one. Okay, you cannot use your social. So let's say it's Adam Bergman. I set up my own consulting company and I have a solo 401k with IRA Financial and I have over $250,000 in my plan. I will need to get a tax ID number for the business, even though I'm not going to use it. I need to use it for purposes of the 5500EZ. It's just a requirement. Trade name, if you have one, in care of, you don't need that. Your address, it could be any address, whatever you use. Your phone number, a business code, that's in the instructions. It's basically, you can do a search in the instructions, like are you in retail, consulting, tech, and you just find a code that's somewhat applicable to your business model, business type. And if you need help with that, let us know. We can send you the links. It's in the instructions. What I can do actually is just put in the instruction link in this video chat box so you can have it for yourself. And this link will have the codes. So if you're trying to do this yourself for some reason, you don't have to. you could figure it out, but you just try to match it. And then obviously your city, town, that stuff. It's pretty basic. So as I mentioned for 2B, when you would enter the adopting employer, that's the business. Here's some information. Again, it's in the presentation online, but how you can get an EIN. We can do it for you if you need it. If you're a client, we will do that for you. So don't stress it. Let's go to part 3. Hold on. Okay, here we go. So part 3, the plan administrator's name. That's basically the business name. Okay. Shouldn't be an individual. It should be the business name. You're going to put the administrator's EIN, which would be the business EIN. Okay. The business would be the administrator. Then the business would hire a third-party administrator like IRA Financial to do the actual work. But technically, the administrator's name is the business. It's not an individual. It's the business. And then the business would hire IRA Financial, pension investors, and other TPA to do this. You put the phone number, your mailing address, your city. It's basically going to be the same as the business as section 2. Okay. Question 4, if the employer's name, if anything has changed, you're going to indicate what's changed. If you change your business, change your plan name, you change your EIN, just would indicate it here. Not a big deal. Okay. Question 5, section 5, you're just going to give the IRS how many participants, right? Participants mean people that are active in the plan, right? Who's eligible, who's active. If you have a solo plan, it's going to be 1. If it's you and your spouse, it'll be 2. If it's you and 2 of your law partners, it's 3. You guys can figure it out. And then how many at the beginning of the year, how many at the end of the year, and total number of active at the end of the year, right? You guys can read. It's not that hard. Most cases, it's like 1, 2, or 3. Most solo plans don't have more than a few people. Okay, this is important. Let's go through this. Okay, so section 6, total plan assets. Beginning of the year and end of the year. This is important because this is what the IRS looks at to determine, if anything's interesting here. So plan assets includes everything, right? The cash in the plan, the assets its own, stocks, mutual funds, ETFs, real estate, crypto, whatever's in the plan, and anything you contributed to the plan, right? I put 10 grand in, 50 grand in, 30 grand in, pre-tax, raw, after tax. That is generally going to be end of year, right? Beginning of the year is what you started with as of January 1. It's going to be probably the same number as last year's 5,500 easy. And then what's the difference? Did things go up? Did the stock portfolio go up? More cash? Your real estate went up? Did you contribute money to the plan? It's going to be here. The liabilities is going to be, do you have any liabilities? Do you have a non-recourse loan out there for real estate? You use non-recourse leverage to buy stock, right? In most people's case, it'd be 0. But I do have a number of real estate investors that use leverage. So that's where you would put it here. Hey, 50 grand, now it's 30 grand, or 120, now it's 110. And then you net them out. It's just math, right? You guys can do that. Obviously, this number should be more than 250 if you have to follow 5,500 EZ. But as I mentioned earlier, if you are below 250, but in the past you filed 5,500s, keep filing the form. Even though technically you don't have to, it's going to save you a lot of headaches down the road. Okay? So this is pretty simple stuff. You guys can calculate that. But remember, it's fair market value, and it's not just cash. It's assets like stocks, mutual funds, cryptos, gold, real estate, private business stock. How do you value it? You're the plan administrator, the trustee. You need to provide a value, right? Real estate, you can use tax records, online, Trilio, Zillow, whatever you feel is reasonable. If it's a private business investment, what you paid for it, maybe it's changed. Cryptos, you can look. Stocks, you can look. Mutual funds, you can look, right? That's pretty simple. 12/31 was the value of Tesla, and 12/31 next year, what's the value of Tesla? Cash is cash. That's easy. Private alternative assets, a little more difficult. So you're going to have to try to figure that out. If you don't know, you can just use what you paid for it, assuming there hasn't been any material change in the investment. If there has been, meaning you paid 80 grand for this LLC interest, but they just went public and now it's worth 800 grand, you got to put in the value. You want to be consistent, okay? You don't want to have a situation where you go 250 to 25 million. That's going to raise flags. You're probably going to get audited. I just had a call this morning with a potential client. They're like, how do you determine if someone gets audited? Like, what do you know? And I'm like, I don't know. Anyone who tells you they know or BSing you. No one knows. The IRS knows. They have algorithms. I've been doing this 15 plus years. I've been a tax attorney for 23 years. I don't know. And I'm not going to lie to you. I don't know how people get audited, but I can tell you, if you went from 250 to 25 million and the IRS didn't audit you, then I'm not sure what our government's doing, but you probably would get audited. You would think there's got to be something in the computer that would say like red flags, something's going on. So just be consistent, right? You want to be consistent. Now, if that's possible, I guess, like I've seen it during COVID. I've had some clients where they invested a few $100,000 in a private business and they made like 18 million in one case. It's possible. But if you're consistent every year, you'll show gradual growth. And I think that's going to be better to show over the long term than just a big jump in value. So that would be a suggestion of mine. Let's go to section 7 now, which is also very important. Okay. So this is where people get confused. It shouldn't be. Okay. 7A is employer contributions, profit sharing. Okay. Participants is your employee deferral. And then C would be like your mega backdoor or rollovers. Okay. But A would be profit sharing, employer contributions. B, your employee deferral. So 22,500 or 30,000 in 2023. This is the profit sharing, the 20 or 25%. C, I would put the backdoor Roth IRA, the mega backdoor, up to 66,000 in 2023. Or if you did rollovers, right? You rolled over an IRA from a former Fidelity to your new solo K, you put it in C. Okay, so just keep it separate. The IRS likes to see employers, employees, mega backdoor, and rollovers. Not that difficult. Okay, here's the codes. Okay, these are like participant codes. It's in the instructions. These are the codes that generally people use. E as in Edward, 2 J as in Jason, 3B as in boy, 3D as in David. If you are using a brokerage account, 2 R as in Richard. If you're part of a control group, meaning you have 2 businesses, you own more than 80% of both businesses, and you have one plan for multiple businesses, indicate 3 H's in Harry, because the IRS needs to know, they may want to know that, how many, just to be aware that there is a control group rule issue. If you have issues with the codes, you don't know them, this doesn't make sense, reach out to us. The instructions that I dropped into the notes or in the chat box, I should say, if you go to the end and just start looking for codes, you will be able to see the codes, but these are the ones that would apply because you have a self-directed solo plan. Some people have a brokerage, control group rules. Doing this 15 years, there's not many other codes that would apply, but if you're not sure, you can check it out, or obviously you can contact us. That's what we're here for. So now the rest is super easy. 9, let's go. Sorry, let me go to the thing. Okay. 9, did you take a loan? Right? So, did you take a 401k loan? You can borrow 50,000 or 50% of your account value, whatever's less. You can use that loan for any purpose. You would know that. Obviously, if yes, enter the amount. So do you have 20 grand left, 40 grand left, 5 grand left? Just include it. And then 10 and 11, just you don't have a DB plan. You may, but if you have a self-directed solo plan with IRA Financial, it's not a DB plan. It's not subject to minimum funding. So you would just do no's across the board for 10, 11. If you are looking for a DB plan, we have a great relationship with a company called Pension Investors. They've been doing DB plans for almost 50 years. A DB plan is basically a defined benefit plan that, depending on your age, can potentially get you like over $300,000 in deductions. So if you are looking for massive deductions, let us know. You can reach out to Pension Investors, IRA Financial, and we will get you in touch with an expert, an actuary that could design a plan for you, and you can figure out if it works best for you. If you're maxing out your solo plan and you want more action, you want more deductions, you're maxing out at 66 or 70, 73.5 for 23. If you're over 50, then you want 100 or 150 or 200, depending on your age, you may be able to get it. Reach out to us and we can put you in a what's called a defined benefit, also a combo cash balance plan. And we'll also obviously fill up to 5,500. But if you just have a regular solo 401k with IRA Financial, 10 would be no, 11 would be no. Now 12, this is new. Okay. So all you people out there that are like, we don't need to pay IRA Financial like annually. We can do this ourselves. We're smart. We can do this ourselves. Okay, you could technically, but you're going to need our opinion letter. And again, Our annual fee is $399. It's money. I get it. You can do something with it. But we also are providing a very valuable service. Not only do we do all the plan administration, plan consulting, providing updated plan docs, but we're responsible for you, right? We have our plan opinion letter from the IRS that is aligned with this plan. So we're responsible for your plan and your documents. So now the IRS basically wants to make sure you actually have a plan. This is smart. This should have been there from the beginning, because trust me, I've had a lot of people call me and say, Adam, I basically think I have a solo 401k. I'm not sure. I haven't paid a company in like 12 years. I have my plan out there, but I'm getting nervous. I understand the IRS now asks for my opinion letter, and I don't have one. And the company I used to work with are out of business. So can you give me an opinion letter? So we work a deal out. We're like, listen, no problem. You have a plan. We'll give you a discount because we got to use our plan documents, right? I can't give you a plan opinion letter for a plan document from another business. It's got to be my plan document because the opinion letter only works for my plan. So if you're out there and you're like, I don't want to pay IRA Financial, I don't need these guys. Well, you kind of do, because you're not going to be able to fill out the 5500 EC because the opinion letter you don't have. And if you have it, it may be outdated and the serial number may be outdated. Now, if you feel like you're going to make it up, that's on you. But if you do get audited and you don't have a valid opinion letter, your plan's garbage. It's not worth anything. Your plan is blown up. The IRS will blow up your plan and treat it all as taxable. So for $399 a year, which I get is money, but trust me, we're not making money on this. This is just covering our costs to do all this work. It's foolish. I mean, I'm sorry, that's foolish, especially with inflation, the way stuff costs. Like you go out for dinner, it's $150, $200. Like we are doing a lot of work for the $399, and we're taking responsibility for your plan. So it's kind of the least we can do. We've tried to keep prices as reasonable as possible. We just raised our annual fee from $299 to $399 for solo Ks. That was the first raise since 2010, 14 years. I think that's fair. Okay, penalties, big changes. Old law, it was basically $15K max. Now, $150,000 max. So you remember when I said, hey, filing this stuff is significant, it's crazy? Yeah, $150,000 penalties for failure to file. That can blow up your retirement. Do I think that's fair? No, that's crazy. Is an information return, no taxes due. I can't imagine the IRS would enforce this, but I've seen it, and it's wrong, right? I've been in touch with a client that had an audit. She screwed up. She forgot to file the 5500 for like 6 years. She should have. Okay, she just stopped doing it. For whatever reason, she was not our client. Trust me. We reach out to our clients. We make sure they're aware of this. She kind of knew it was out there, but she just like didn't do it. And the IRS, since she filed the 5500 EZ at one point, it took the IRS a bunch of years, but they found her. And they basically, because she never filed the return, the statute of limitation never ran. So it wasn't just a 3-year statute of limitation. It was a unlimited statute of limitation because she never filed the return. So they went back until her first return. She went back like 6 years, and they want to impose more than 150 because there's penalties and all this other stuff, and interest. So it's no joke. Okay. Yeah. Should it be a max of like 5 or 10K? I guess so, right? You need to force people to comply. If there's no penalties and no one will file this stuff. So I get it. And the IRS wants this information. Fair enough. But $150,000? Like, are you crazy? That's just bonkers. But that's the rule. So we are here for you guys. Like, we want to help you guys. We want to file this stuff, right? We have a whole team. That's why the $399 is there. So we can pay for an amazing team of people that can help you file, can do all the tax reporting, can do the consulting, the analysis. We are here to help, but you got to respond to us. I can't tell you how many people that we email or call that literally ghost us. They haven't filed their 5500 EZ. They probably don't even have an opinion letter. They don't care. But I know they're making contributions because I see the money coming in. But they ghost us and they refuse to talk to us because they think they're getting away. They're smart. They don't want to pay us $300. Guess what? You're going to pay $150,000 to the IRS. And like, it drives me crazy because I'm like, listen, if you call me up and say, Adam, I'm having a tough year. I can't pay you $399. Can I pay you $150? Or can I pay you $10 a month? I'd say, of course. Like, we want to get this right. I'm not looking to take every last penny you have, but you got to pay us something, because if not, there's no relationship, right? There's no business relationship. So if you said, hey, times are tough, can I do $10 a month for 2 years or whatever? I'll work a deal out. I promise. Okay. But I don't want the IRS to hit you up with $150K, but I can't file the stuff on my own. Why? I don't have all the information. I don't know the values of your real estate. I don't know the value of your contribution. I don't know how many participants you've had. I don't know if you took a loan in some cases. Like, I can't just file this stuff. A lot of clients are like, oh, why don't you just file it? Like, why do I have to help you? I'm paying you. I'm like, well, you're in charge. It's your retirement account. I don't know what you're investing in. Yeah, I saw you started with 100K, but what's it worth now? I don't know. So you got to work with us. You got to communicate. If we're calling you or emailing you, please respond. It's for your interest. Like, this is your retirement. You have an account. It's a real responsibility. When you set up 401k, it's supposed to be permanent. This is not a joke. $150,000. Please let us help you. Please respond to us. That's all I'm saying. If you can't pay us, we'll work with you. Like, we're not looking to take your money. We'll make a deal with you. We promise. We're not the government. We're trying to help you so the government doesn't bother you. Again, the deadline is for the solo K. It's July 31. You file the Form EZ, not the short form. Make sure it's the EZ. Only if it's over 250. If you're close, please file. If you're 230, 240, just file. Okay. A lot of people are like, well, I don't want the IRS to have any information on me. Do you want $150,000 penalties if the IRS feels like you're over 250? It's not worth it. Just file it. They're not getting any information. Any information they get, they have. They know your company name. They're going to know how many people are involved. So they're going to get the value of your 401k. They're not even asking what you're investing in. So don't worry. Just comply. And if you're close, just please file. Again, if you use a non-recourse loan to buy real estate, it should be added to the value. This is a very important point. I've made this point before in previous videos in previous years on the 5500 EZ. I had a client, I think this was like around 2016 or 17, from North Carolina, a very smart lady. And I think the numbers are a bit hazy now, but the bottom line is she had like 150 in her plan, and she borrowed 100,000 non-recourse for like 120. And that put her over the 250, but she never filed a 5500 EZ because she's like, my net asset value is not 250, it's like 150. I only put in, that's my value, right? If I sold the property, I got to pay the bank back. So that's not my money. But, and I actually participated on a call with the IRS with her. And the IRS is like, listen, when someone asks how much your house is worth, do you say how much you put in, or do you give them the value? So she's like, I guess the value. So like, exactly. We want to know what it's worth. So even though you put 150 in, if it's worth over 250, we need to know. And they were very good. They're like, we're not going to penalize you. We get it. It was kind of a gray area. Just refile it and put the value. And they were super cool. And we did that. There were no penalties. But just remember that it's your total asset value. So even if you put 100K in and you borrowed $1 million, it's 1.1 million the value, not 100K. So very, very important. That's really it. So the form is super easy. The most important parts, the penalty, 150K, do not mess around. If you're close, file. If you started filing, file. This is new, question 12. So if you're out there and you think you're fooling everyone because you haven't paid us $399, you don't want to pay us, that's fine. You don't have to keep paying. You want to make sure you have the right opinion letter. If you have an outdated letter and you get audited, the plan's not going to be worth anything. Again, if you have trouble paying, just call us. We'll work with you. Don't worry. It's not like it's a lot of money. The codes, just make sure I included the instruction link in the chat box. So if you have questions on that, these are the codes. Again, 2 E's in Edward, 2 J's in Jason, 3B, 3D, and then 2R if you have a brokerage firm, and 3H if you're a part of a control group. If you're doing the contributions, it's employee profit sharing, then employee, and then either rollovers, and the back door should go under C. If you have a question, come figuring out your total contributions, let us know. We have calculators. We'll work with you. The plan assets, this is where the loan, if you have leverage, you put it under B, and just make sure you're accurate as possible. And it's better to be over accurate than under, because again, you don't want to be in a situation where you're going from 100K to 6 million. It's better to gradually get to that 6 million. It's going to probably make things easier for you and probably protect you, hopefully, from any inquiries from the government. All the other stuff is pretty explanatory, pretty basic stuff, right? It's just basic info about you. Nothing too difficult. Remember, if you're a sole proprietor, you can't put your social in. Get a tax ID number for your business. We can help. There's instructions here. And this PowerPoint presentation is available on our website, along with a link to the video, so you can always check it out at your leisure. What else do I want to say? And then this is, remember, you can file an extension or we can do it for you using the form 5558. And then if you're doing a retroactively adopted plan, meaning you're setting the plan up in February for the previous year, check E. This is a new box as well. Some questions. What about the setup? Did I hear you raise the price? No, there's no raised price in the setup. The setup's $999. We raised our price in our annual consulting, which is the $399. It used to be $299 for 14 years. We just raised it $100. We haven't raised our prices in 15 years, but guess what? In order to get talent and get people that are going to help you and have the expertise, we unfortunately need to pay people more, which is good. But we got to break even. We can't lose money on this, and we want to provide the service. If the value of my assets go down below 250 in any given year, do I sell? Do I still need to file? So yeah, Bill, again, yes. Technically, the instructions say no. I say yes, Bill. Why? Because this is what's going to happen. I've seen it. You file for 1, 2, 3 years consecutively, and you stop. And then maybe a year later, you file again. The IRS is going to send you a letter at some point within 3 years and say, what happened? And then you're going to need to explain, oh, well, I was under 250. And they're going to say, prove to me you're under 250. And you're going to have to go back in time, 1 year, 2 years, 3 years, and now make the IRS happy. And you'll do it. Hopefully, you have all the backup facts, but why get there? Just file this stupid thing. It takes 2 minutes. We'll do it for you. And you won't have to get into that whole conundrum of, oh my God, like, what did I own 2 years ago? What was the real estate worth? Go back and like Google machine and look what the value was and get all stressed, write letters to the IRS and pay an accountant or a lawyer to help you. Like, why? Just file the form. Okay, I missed this. If you mentioned this already, but if you have a mortgage outstanding using your investment funds from IRA Financial solo at the end of the year, beginning 2023, does the outstanding amount go under total liabilities? Yeah, under 6B, yeah, you're going to need to put that in. So let's get to that. Okay, so let's say you start off with 100K, beginning of the year 0, because you just set up your solo plan. End of the year 200, and beginning of the year your plan liability you bore 100 is 100, and then maybe it's 90 because you paid 10K off, right? And then you net it out. Okay, so you'll get to the net amount, but you need to at least include the liability from the beginning of the year at the end of the year. The IRS wants to see that. How many years can the delinquent filer program correct? You can go back many, many years. I've had someone go back like 7 years because the statute technically hasn't told, Bill. So go back till you file. If it's from the beginning, I go back. I think it's about $600 to do it. There may be some additional fees that we or someone will have to charge to amend these returns. Technically, you can do it yourself, but it's worth it because if not, you're looking at probably $150,000 in penalties. So that's why I do these videos. That's why we send multiple email reminders to folks and call folks who haven't paid our annual. It's not because it's for the money. We're not money hungry. We don't want our clients paying $150,000 penalties. Okay. So please, 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 if we are emailing or calling you, please respond to us. Even if you don't want to pay us, just say, listen, times are tough. I'm going through some stuff. I can't give you $399. Can I give you $100 now? Can you come back 6 months later for the next payment? Like, we'll work with you. We just need you to at least be engaged with us because we can't help you if you don't provide us the information. If we paid IRA Financial full fee, and IRA Financial will be filing the 55 easy for us. Well, IRA Financial only fill out the extension. Generally, if you tell us you want to do it, yeah, we're going to do the extension for you. So don't worry. But you need to engage us and tell us you want us to do it. If you provide us the info, yes, we will extend. Great video. But I did not see the instruction link in the chat. The instruction link, there's two links. Did I send the same thing? The first one should be the form. If you scroll up top, and the second one should be the instructions to the IRS. It is. I did the right thing. The first one is the form, and the second one is the. But let me redo it. Maybe I didn't copy the right one. But it should be. The instructions are definitely here. I think it's the same one, but. If you need help, we can send you the instruction link as well. But this is everything you need to know. The only thing the instructions will have is I'll have those company codes, okay, which let me just tell you what page they're on. If you don't want to scroll, I'll find it for you right now. They're on page 7. It says list of plan carrier. So page 7 will give you the codes for this if you don't trust them. So these codes are on page 7 of the instructions. And then the business codes are on page 8. And like, for example, if you are I don't know, let's pick something that's relevant. Okay, computer electronic product manufacturer. Well, that's pretty out there. What about, let's find a real estate one. Okay, real estate. Let's say you do real estate property managers. The code would be 531310. So it's all here. You just kind of find the code that works for you and you're good to go. That's it. Okay, you found the description. Okay, so that's it. That's it. I hope you guys enjoyed the video. I wanted to keep it short. I ran out over. I really can explain this code, this form in 3 minutes, but I guess I'm a lawyer, right? I don't know if people know this, but one of the first things they teach you in law school is keep talking. Why? The meter keeps running. I'm joking. They do not teach you that. Law school, they don't teach you that as a law firm. Lawyers like to talk. That's why we became lawyers and rights. So the solo K is easy. It's really easy. This is one of the easiest forms. The IRS got this right. If you're close to 250, file. If you're unsure, file. If you're unsure, reach out to us. We're here to help. That's our job. Don't be shy. Don't dodge our calls. If you don't want to pay us, still respond to us. We will work with you. We'll still help you if you can't pay. Just reach out because we need your information. We can't file this without you. So please, please, please cooperate. We're here to help you. We're here for you guys. I don't want anyone. My biggest nightmare is getting a call down the road saying, Adam, I'm in trouble. I haven't filed this thing in 3 years, 4 years. I should have. I owe $150K. And I can't get you into the voluntary compliance relief program because the IRS already caught you. So now we got to beg for mercy and make plea deals, and it's not good. If you haven't filed in previous years, reach out to us. We will help you get into this voluntary relief program. It's worth the small fee to get in so that you can come clean and circumvent any other future penalties. It's definitely worth doing that. Otherwise, it takes 3 minutes to do. We'll do it for you. If you want to do it yourself and need help, call us. You're going to need your opinion, date, and code, so you'll have to get that from us. Otherwise, that's it. Super easy. And literally, if I speed tested myself, I could probably complete the form in 30 seconds, 50 seconds. So don't stress, okay? And if you're close, file it. That's it for today. I hope you enjoyed the video. Hope everything is going well. Your summer is going great. I hope I did better than the debate yesterday. That was pretty bad. So hopefully I was better than the President Biden on that one. Otherwise, I guess it wasn't too hard to compare myself to that, but that was pretty bad. Without getting into politics, that was just, you have to feel bad. Whether you're a Democrat or Republican, that just was not a great day a great evening for our country. Otherwise, have a great day. I'll be actually doing some more videos comparing, because Trump and Biden talked about their tax policies just a bit, but I'm going to do a future video, probably a podcast too, to talk about the corporate tax and tariffs. Former President Biden Trump talked about and talk about, I actually did a podcast talking about Biden's tax policies that he came out with, but I'll probably do another one just comparing and contrasting because more information is coming up. Because I think tax policy is important. That's for me, the biggest issue is tax policy. And it's important to understand if Biden wins, what that means, and if Trump wins, what that means. Because obviously you're watching this video, you care about the retirement system. If you have a solo K, you're a business owner. So I think understanding corporate taxes to some of you, including myself, is important. That's something you should consider when you decide who you want to vote for. At least that's something I strongly consider. So both sides have some interesting concepts and ideas. So I'll go through that in a future video. For the opinion letter, reach out to us, Tom. We'll get that to you. You can reach out to our entity department. We'll get you a copy of the opinion letter, the dates, whatever the info you need. Your instruction link in the description is there. If you guys need anything, let us know. We're here to help. Otherwise, have a great day. Have a great weekend. And hope to chat with everyone again next week. Thanks.